Today, we dive into the current state of the real estate market and why leveraging debt lending is crucial for both new and seasoned investors. Today, I'm joined by Alex Buriak of Jet Lending, one of our trusted partners, to talk about how you can build a successful real estate portfolio and navigating the lending process with confidence. We also covering everything from cash flow and equity to the importance of maintaining liquidity and treating your real estate investment like a business. If you are ready to get proactive and strategic with your investment, this one is for you. Hey, it's V Lee here, and you are watching the Real Estate Baller Show. We are a growing channel, and we've been growing organically, and we could really use your help. So can you hit that subscribe button and share this episode with a friend? It helps us more than you know and allows us to help more people to reach financial freedom through real estate. Thanks. And enjoy this episode. I'm sorry for this interruption. I've been asked a lot about passive investment, and I understand that there is nothing passive about being a landlord unless you can find a great property management company. So if you own an Airbnb, a vacation rental, or a short-term rental, and you are looking to free up your time, contact our team at Buzz Vacation Rentals at 281-549-8432 or check out our website at www.buzzvacationrentals.com. Thank you, and back to the Real Estate Baller Show. This episode is brought to you by Jet Lending. For over 20 years, Jet Lending has been helping real estate investors succeed. They offer 100% financing so you can be in at $0 at closing. I can always count on Jet Lending to fund my deals. If you're looking to fund your next deal, contact our friend over at jetlending.com. This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443.
Hey Alex, I'm excited for this year. How about you? You excited?
Absolutely. I'm excited every year, and this year is no different.
I just feel like this year is going to be a great year for real estate. Maybe having all the stars aligned for the first time, you know what I mean?
For some time, yeah, definitely. I think it's going to be a great opportunity for a lot of different types of investors to really grow their portfolio or even start.
So as a lender, do you guys work more with most of your customer? Are they new, starting out, or what do you see? Do you see more seasoned? Tell us.
Okay, sure. Yeah. So over the history of Jet Lending, it's usually about a 60-40 split of new and people that have done deals in the past. When you're coming into the market that everybody's really starting to project, I think you're going to start seeing some new players in the game, especially as you watch rates and things like that. But we're always a healthy mix of brand new people and people that have been in the business for decades.
So if I'm starting out, let's go down to this path of an investor.
Mm-hmm.
As a new real estate investor coming into this space, obviously you want to start off with one and want to become successful. And then you want to add 2, 3, 4, and hopefully you start building a rental portfolio. All right. So where does Jet Lending fit in all of this in my journey of a real estate investor?
Well, one of the things is, as you guys are listening to this, one of the things that you're going to very much understand very quickly, that money is never the issue. Money is actually the most easiest thing to obtain in real estate investing. It's always finding the property. So how do you start out? Why do you use somebody like Jet? Well, one of the things is for the new people and then the seasoned people that are coming up. One, your hard money lender should always be your first or second set of eyes on an investment. Why is that? Well, right now I have I'd say about 130 some odd million dollars deployed in the Texas area today. And that doesn't span over our experience of the last 21 years. So most likely I have lent or have currently lending into a property that's really around your area. So we look at our past performances in our data. We'll pull comps on MLS. We'll get a third-party appraisal's perspective. And we also get a third-party AI analysis of the market. So when you're doing these deals, you're actually getting a very deep insight on potential values, especially actual repaired value and repair values, because those are always subject to market, and it helps you to define the variable you can't change, which is purchase price, because all your profits and all your returns come from that one variable that you actually have control over and how you bought the property. So that's why people come to Jet Lending. It's not because we're so fast with money too. I mean, you're closing in 3 days from clear to close from title, but you get within 24 hours a full analysis of your potential investment to see if the profit margins are right for you.
I'm going to touch on something you said earlier. Using a lender is like having a second set of eye, because it's so true, right? As an investor, sometimes, I know I'm writing a check and my name is on the line, but you guys, if I use a lender, you are the one putting down the money.
Right. And really, if you think about it, because I'll actually hear this from a lot of investors. They're like, well, if it doesn't work out well, you guys just end up with the property. Well, a good lender doesn't want the property. Am I leveraged appropriately when I fund? I would think so, yeah. But I make far more money as a lender driving people to improve their business, improve their efficiencies, improve their success rate. If I can help you make more money as a lender, you're buying more properties. If you're using me as a lender, I make more money. If you're buying the right properties, you're making more money. So anytime you start a business relationship with somebody, and it really is like, a business relationship with your lender, it has to be a win-win and it has to make sense. So never, whether you're using Jet Lending or not, if your lender is trying to warn you about potential issues with your investment, really listen to them, because your lender only makes money when they lend money. And they definitely don't make a lot of money if they have to take it back and service a non-performing note. So they're really trying to protect you. They're not trying to just make you come out of pocket more money. That's not the deal. It's really that, hey, this investment that you chose has inherent risks. Are you willing to take those risks on the potential reward that you're going to get when you sell or refinance?
I talked to several investors, right, new and old, and especially the one that's just getting started to have some cash. The common things they say is, why should I use a lender when I have money? I have cash, right? What do you want to say to them?
Well, two things, okay? One, in any business, whether it's real estate or selling hamburgers, okay, the more liquidity that you have in your pocket allows you to make business maneuvers and create more wealth for how to leverage your capital into debt. And that debt provides you a certain amount of equity. Okay, you'll hear these terms, debt and equity. So when you use your money, your cash, your return on value or return on investment is actually quite lower. Okay, because you're not leveraging money appropriately to buy inventory. So first thing I tell people is, don't utilize your own capital, because your actual return on investment is much lower, because you're not buying in volume. You're not buying things that may be outside your cash price range. Let's say you only have $100,000, but you really got a tiger by the tail in River Oaks on a $400,000 purchase that's worth 1.2 fixed up with 200 repairs. You don't quite have the capital for that, and you're missing out on these opportunities. The second thing I'll tell people to do is only use cash is if you're going to the first Tuesday of the month, okay? So what you do is you buy those properties cash, and then you come to someone like me the day after, and you cash out, refinance it out. So you get your initial acquisition, the majority of your initial acquisition paid back to you, repairs held in escrow for draws, and now you have enough cash to go to next month's state sale and buy something cheaper. So those are the only reason why I would tell somebody to use cash, if you're leveraging that opportunity to buy something pennies on the dollar, and then get that money that you deployed refinanced out so you can go buy something else.
All right. I do hear you. So this is what my takeaway from what you said. I have 100,000. If I put all my cash in that 100,000 and I end up holding the house for longer, or I screw up on the rehab budget and now I need another 20K. Where am I going to pull that money from? Because I'm pretty sure, the lender won't want to come in and be a second lien positions or anything like that.
No, very few second liens out there anymore.
So that's big. But I'm in the school of leveraging, right? You got to keep your cash in the bank. And I say this, and you're not going to like me for saying this. Let's say I made a mistake on that purchase. I did my number wrong, but I leveraged a lender and I was able to loan money. And I can't no longer make payment. At least I'm not losing out 100%.
No, you're absolutely right. I mean, even as a lender, I'm leveraged appropriately. Yeah, do I have to deal with all the property stuff and stuff like that? But it's a very valid point as the investor why you don't use your own cash. Your liquidity allows you to move and be nimble in changing markets. So if you've deployed all your capital and you made a mistake, you're not getting your money back. If you use my money, you have the ability to leverage your debt, okay, and have more safer with your liquidity, making moves and making financial decisions.
Yeah, and the second point that you made about the tax sales, I think that's really great. Have you guys always done that?
Mm-hmm. In fact, we go down there just to kind of remind people. We have a lot of different opportunities on cash outs and stuff like that for when people buy things cash where they inherit a property that they don't want or all that kind of stuff. So that's a good portion of our business. People actually just coming to us and getting their money back that they paid for something cash or they inherited property.
Okay. Yeah, I mean, that's huge because we all know that when you're down at the auctions on Tuesday, on the first Tuesday of the month, you got to, get a suitcase of cash or cashier checks or something, but it's cash.
They take a cashier's check or money order and that's all they take.
Yeah. Okay, well, that's great. So now I got a few deals under my belt and I'm thinking of scaling my business, my portfolio, real estate portfolio.
Okay.
Is Jet still a fit for me? Should I be looking for new lenders?
Yeah, definitely. And the reason why I and not just because I work here, but the reason why I consider us a good fit is a few reasons. We offer products for investors, whether they're flipping homes, they're buying them and fixing them, and they have the opportunity to rent them. We have 30-year products. We have been in the business for so long that we have actually made banking relationships where we can get a private equity for like $50 million projects. We're just kind of like your one-stop shop for anything investment real estate. We can't help you with anything owner-occupied, like consumer owner-occupied, like a homestead, but anything else that has to do with an investment or a business that is in line with real estate, we basically have the product for you and you can figure out an asset-based way to solve your problem. Because that's really what we're doing. You have a problem. Your problem business is that you need to buy this piece of inventory. You very well or well may not have all the money to do so. We come as a solution with capital to increase your volume and increase your bottom line.
Okay, maybe walk us through a high-level overview of what a deal look like.
Sure.
I got a house under contract. What do I do?
So first thing that you would do, there's a very simple lead intake on our website, and it's very little information about you and the project and what your plans are. You can go do there. You can give us a call. You can text us. You can chat us online, whatever it is to get us the information.
You guys are everywhere in Houston.
We're everywhere. Well, again, for 21 years, we've seen every market and just to kind of give you a side note, there is not a buying season. Every market's a buying market as long as you pivot within the market that you're in. Okay. So yeah, you give us some information about yourself and about the property, very general information. So what my team does is we'll pull comps in the area. And with any pictures, we'll actually give you an idea on rehab in relation to your exit strategy. So if you tell me that I'm going to buy 43 Maple Way and I'm going to flip it and I want a high dollar flip, we'll say, okay, well, these 5 or 6 comps equate to your ARV. You're going to look at about 376. However, if you give me pictures or look at the finishes of these properties, it would seem like you're doing about $70,000 worth of work. You have the open concept, you have quartz, backsplash, all these kind of things. So we're a second eye on value. So you give us that information. And if you say, well, no, I'm going to rent this instead. Well, your ARV is actually 310 because of the rental side of things. You get an $1,800 a month rent. There are these things. So your rehab goes down, but your also value goes down. One of the worst things a landlord investor can do that's looking to scale is when they're getting their deals from wholesalers or they're comping properties on full ARV value. Well, everybody does this and they'll get in everything and you'll do the repairs and then you try to refinance, but the ARV comes much lower and you're coming out of pocket a large amount of closing for your refinance. So it's important to really, really talk to your lender about exit strategies and your plans so you can actually get a good idea about what this property is going to be worth with the type of finishes that you're doing. So that's why they'll come in and do that. And that's how we help people scale. As Jet Lending, probably one of the only places that does this. We actually take a look at what you're trying to do. And if you let us know what your business plan is on how you're trying to scale, we'll actually give you a roadmap of how you should do this with leverage and how to analyze this stuff. Because as V will tell you, real estate investing is just math. Does A plus B equal C? Okay. And if C is in the black and in the black that keeps you in business, then you buy the property. If A plus B equals C and C is in the red, you don't buy the property. So I don't want to hear any of you guys coming to me and telling me, well, I only buy in 77007. No, you don't. You buy things that make you money. Okay. So you have to kind of expand your horizons and understand that this is basically math. And if the numbers work, you buy the investment. Then you need somebody like me to help guide you.
So, yeah, I think at the end of the day, your lender is your partner, and you should treat the lender like a partner and not an enemy. I mean, I'm thankful for Jed. I'm thankful for other lenders and banks that have allowed me to grow my portfolio.
Absolutely. I mean, one of the things I'll tell you, like V used the word partner. I will tell you this, if you really want to scale your business in real estate investing, you have to treat people like me and anybody, third party, title companies, real estate agents, GCs, subs, mentors, bird dogs, skip tracers, all these people. You're actually hiring an employee for your business. It's almost like a 1099 employee. So you should interview these people, lenders included, to see are they right for your business and how they operate. Do we speak the same language? Are you as responsive as I am? Like anybody tell you that's worked with me, you send me an email, you don't get a response within like 4 minutes, I didn't get your email because we're just busy and organized. So one of the things that you should really consider is honing your interview skills because you guys are already great negotiators when you're buying properties. Use those skills to interview these third-party vendors such as lenders. Are they right for your business and how they operate?
Totally. Tell me more about this roadmap that you said. So I come to you and I'm, still fairly green, got a little bit of experience, flipped probably 5 houses at this point. And everyone kept telling me I need to add rental. So now, like I said, I got a little bit of cash. I want to scale. How does Jet help me?
So first thing we do, just because most of us have been doing this for so long, first of all, you should take a look at the pedigree information about yourself. One, what's your credit score like? Because most of the 30-year stuff, you're going to need to get at least decent rates. You're going to need a 680 score, okay? Or somebody in your entity at least needs a 680 score. So first we do is we kind of line up all the pedigree information about yourself. Let's say V comes to me and says, Alex, I need to buy 10 rentals this year. So, okay, well, it's January. We do have time, but not a lot of time. You'll blink your eyes. It's going to be Christmas. Okay. So V needs to do 10. Okay. Well, what's V's credit score? Well, V has a 17 credit score. Okay, cool. So she's so far in compliance with refinance. Okay. Question number 1 answered. All right. Well, how much liquidity does V have? V has $73,000 today. Okay. So V has $73,000 today. All right. So second thing, hey, V, if you're going to be doing 10 of these, just for your own business purposes, have you interviewed property managers or anything like that? How are you managing this business? Because the worst thing an investor can do is become everything about their business because you're going to spend more of one thing, time or money. And as you're making more money, you're going to have less time. So that means you have to hire third-party people like employees, like property managers and things like that. So are you in compliance for what your business goals are by quarter 2, 3, or 4. So I don't need to help you with that, but you need to be aware of it. So again, be aware of your process. All right. So if you have $73,000, All right. So what you have to try to see is like how much dollars out of pocket can you come out of pocket with, and how many deals at once can you do? Because at Jet Lending, you could be as in many properties as you want, as long as you can pay your note and get the work done and things like that. So as we do deals together and we watch your liquidity, we say, okay, well, listen, you're probably going to be able to have to buy these for 10 properties for $73,000. You're probably going to have to be close to $0 out of pocket at closing for your first closings, for your renovation closings, if you're going to want to scale to 10. Okay, so you got to buy these. All right, so I would put you in line with that. The second thing I'll tell you is, listen, I'm a big proponent, if you ever want to stop doing this is holding a portfolio of rentals. But one thing a portfolio of rentals doesn't do is increase your liquidity rapidly. That liquidity will...
It does the opposite.
Yes, it does. You are buying this off of appreciation values. Most landlord investors will hold a portfolio about 6 or 7 years and either refinance the portfolio or dump the portfolio and buy something bigger. Okay. Well, if you are in line with that trajectory for about 6 or 7 years, well, you also have to be able to wholesale or flip ever so often to increase your liquidity. So even though you want to transition to a landlord or a rental type investor, you never forego the other types of investments that increase your liquidity quickly so you can continue to buy inventory. And then you have to consider, as your portfolio grows, let's say 20% of your inventory is going to be vacant at any given time. So you have a separate account, to make readies and stuff like that. A lot of your cash flow, and V, you'll know more about this than me, and so she may disagree with this, but most of your cash flow, if you're making cash flow, should go into an account ready to renovate that property or do something for that property because it's coming. You're going to have a hailstorm. The AC is going to go out. Somebody clogged the toilet and broke one of the pipes. Whatever it is, like when this is going to be aired, you'll never know. Well, we're supposed to have a big freeze. Did a pipe burst in your rentals? All these little things are going to happen. So you should have some capital set aside to manage your current inventory. Your biggest return on that investment is going to come years later when either you sell the portfolio at Houston. If you're going to be in Houston, you're averaging about a 5% in appreciation year on year. So if you have something that's worth $100,000 today, inherently, it should be worth $105,000 next year just by existing. So that is where you're going to get your money back. So if you're going to be a landlord investor, you have to strategize ways with your lenders and your teams to increase liquidity to continue to buy inventory.
Hey, what percentage of your clients actually get cash out when they refi? Like when they buy the property, fix it up, and then put a tenant in, refi at that point, what percentage of those deals actually get cash out?
I would say you're at about maybe 30 or 40%. And the reason why it's that number is because most people just like a rate and term. And what I've seen since 2022 is that the purchase prices that people have been doing have been a little bit higher than they're used to on what they're leveraging. They're coming out of pocket a little bit more. So there's not an immense amount of equity. I have to look at, and you should look at this too as a business person, all in numbers. Okay. So if you're out of pocket 20 grand at closing for a property, for a short-term loan, and then you refinance, and let's say you're out of pocket, let's say the appraisal, because on your refinances, the appraisal is gospel. So that's why it's very important that we get these numbers right in the front end and you do the repairs subject to those values. Mm-hmm. But the market can shift. So let's say you're out of pocket 7 grand on your second closing. Well, you're really out of pocket 27. So you have to find a way to make that full 27 back. All right. So a lot of times there's not enough equity recently to do initial cash out when you've purchased it, renovated for 6 weeks, then refinance. That margin usually isn't there in like 6 or 7 weeks. Where I see the 30, 40% that do it, they've held this profit for 12 months or 3 years or whatever. They've been stuck in a loan or a bridge loan. They've had some issues, but the appreciation itself has warranted to be able to cash out. What we're seeing the most success is people that have purchased in like 2020 and 2021 and had an issue getting out. They've improved their credit scores and stuff. In COVID, we had a 41% increase in values over 3 years. So those properties have extended their value and has the opportunity for a cash out.
Yeah, but that's an anomaly, right?
Very
Yeah.
anomaly, yes.
I want to touch on back on what you said, and I'm going to put it in plain language here that, I'm not speaking against rental. So don't think that I am, because I have rental. And every time I sell a rental, I regret it down the line. So there's never a time that I'm happy I sold a rental. So let's settle that. But what I think investors don't realize is holding rental is expensive today.
Yes.
It's today. It's eating your cash, right?
Just the difference in reinsuring your property can dramatically shift your cash flow margins from year to year. It's also property taxes. Property taxes as insurance have been kind of the Achilles heel of rental investment for the past 2 years or so. So when you guys are building your inventory, know that most likely for the next few years, if not more, that insurance rates are going to continue to climb and property taxes are going to continue to climb. So when you're making your initial offers for distressed real estate that you're going to fix, you should have an idea currently of what it's going to cost for insurance and cost for property taxes. And if that area has increased property taxes recently, so you can make adjustments over the next few years. And again, this is all just math. So if you're buying something like, oh, I'm $0 out of pocket and I'm this and I'm that, okay, great. But if your property is $1,100 in rent a month and your insurance is $4,000 a year and your property taxes are $8,000 a year, does that equate to being in the black for your cash flow margins, especially if your current 30-year rates are probably in the high 6s to mid 7s?
Let me give you an example. So I got this rental. I've had this rental for 5-6 years now. And I mean, my mortgage payment, PI, is less than $1,000, 900 something. My rent is $2,250. So I feel like I'm in great shape until just a couple of weeks ago when we had to pay tax and we look at the P&L for that property, and guess how much cash flow?
Negative $20.
Not that bad. I was thinking I'm making like, a couple hundred, 400 or 500, right? But I actually was only making 100. And
for that argument there, for V's argument, she still has an appreciating asset that's cash flowing. And that's why like I'll hear people, get 10 rentals and live for free. No.
So you're right. So the exciting part is this. I bought this property. When I bought it, I mean, the ARV was 200. Today, that ARV
320.
Actually, no, it's 360, 370. So I bought it right.
Right. And so, you're only making $100, but $100 in that has been realized. The unrealized gains, how much did you buy for?
Oh, 117, 118.
Out of pocket at closing?
No. Yeah.
Yeah, is that over the last 6 years has probably gone to what, 98, maybe 100. So she sells it for 360. She can do a calculation to see what her true net proceeds were. But really, if you just do really quick math, so we'll call it $260,000 on paper of equity. I mean, so to me, that's worth $100 cash flow because my return is that unrealized gain until I realize the gain, until I liquidate that asset or collateralize it into something larger.
Yeah, I mean, so I can, excuse my language, bitch and complain about rental all day long. But when I start putting my Excel sheets or Google sheets out and look at the numbers, then I shut up. Because where can you get that?
You can't. You're not going to be able to get that type of percentage return in a mutual fund or unless you are heavy into shorting and doing stocks, and that's all you do. And I guess you could, but you tell me where you can put a fixed asset in and get that type of return cash on cash, you're not going to find it.
Yeah. And I mean, to do this well in the stock market, you have to be really smart. And I don't put myself in that category.
Well, it's just, I mean, just like anything else, it's like you got to be on it. If anybody tells you, like if you follow V and her story at all, if you treat this industry like a business, like you're really running a business, today, a lot of you guys that are listening, you'll hear her success and you'll hear like that she has, VAs and stuff like that. Well, you're like, well, that's not me, or I got 20 rentals. Well, that's not me. That's not you today. But if you structure your organization as a single person employee today, and you project, and this is the kind of things we do, in 6 months, what do you need? Whatever you need in 6 months in operations, you need today. Okay, so I need these Excel sheets. I need this to follow up with my business. And then once I hit X percent, I got to hire a VA, or I got to hire an employer, or I got to hire a property manager. So you're in operations of your business. You really are scaling a business. If you guys ever want to make a lot of money doing this, you have to run it like you're running a corporation, even when it's just you. Every month, you're going to sit down with the board of directors. That's just you. And you're going to spend 2 or 3 hours going through the board, answering questions, even if it's just you. Every quarter, you're going to talk about quarter P&Ls, where you're at, even if it's just you. Because one day you're going to blink your eyes and 7 years is going to pass. And that board of directors is 4 people, 9 employees, 2 VAs that are over in like Mexico and India, and you all are going to meet. And it's going to do well because you've always done it that way.
Yeah, totally. You got to treat this like a business and not a high-paying job.
You can get easily fired from that job if you don't manage it right.
That's right. And it's too risky to that every aspect of the business depends on you.
Yeah.
So I think it's very possible for someone who actually want to scale their portfolio and not doing this full time. Because I'm sure you guys have a large amount of clients that, maybe still have a W-2 job somewhere else, but they adding a rental portfolio.
So those are my money people. Okay. I said you have to pay more time or money. So when I got a bunch of guys over at Exxon or Halliburton, or they work in the energy corridor or something like that, well, those people spend more money than time because they don't have any more time. But so they put operations in place. They hire mentors, they hire bird dogs, they hire property managers, all these kind of things to put their business in place, because one day they actually do want to exit the Exxons and the Halliburtons and stuff like that. But I'm going to break the suspense for you folks. All the DIY shows that you watch and stuff like that, and they're just having a great time. You have just started a business. You are going to be basically the CEO of a company, whether if it's just you or not. The first day you're the CEO and the janitor, okay? But you have to think of it that way, and you're going to spend more time or money. And then when you use people like Jet Lending, we help you strategize, at least in the financial sense, of how you can incorporate your acquisitions with leverage while you're busy running your business. So yes, V is absolutely right. You guys you do this. If you actually haven't listened to V's story about how she started in the time frame in which it happened, that is not uncommon for someone who's very organized in this business. This is not rocket science. This is basic math and execution. And I say execution because of this. You got a lender like me who's closing in 3 days. So basically, prepare to close in about 10 days, because title usually takes about 5 to 7. So you have someone who's ready to move fast for you. All right. If you have everything structured, this is the hardest thing, finding the property and managing it. The money side of stuff is super, super easy. So when you have teams like this in place and you're running a business, listen to what her story was. How long did it really take you, Ving? What was it?
I've been around for 10 years.
I know you've been around for 10 years, but you started and just think of that, because I always tell my investors this: never forget the time that you didn't know. And I tell my staff the same thing, because it's easy to get like frustrated at things. Where you're like, well, they should know that. There was a time when even V didn't know, and she started, and then she accomplished her goal. That was probably a year or two where she was running teams and buying properties and stuff like that, because she had a system, an organization in place, and found mentors and found people that she can trust to scale her business.
I agree. I mean, there's flippers, people who listen to this podcast, starting out season, the flippers, there's landlord. And I will tell you what, I'm thankful for this, that I tried to assign a property to in my early days. I was under contract for, I think, 130, and I tried to assign it for 160. and they didn't want to pay me that. And they said, why don't you just keep it? Just hold it. And I held it. And I mean, that was my first rental that I added to my portfolio. And I still have it today and not one regret. Now, if I sold it, I'd probably be screaming right now. Well,
Why?
because of the appreciation. We're talking about appreciation, right?
Right. It's like every landlord that liquidates, it's like, oh, because you see the opportunity over the X amount of years. You are going to do well. You just have to be able to hang in there and pay your bills on time. Don't get over leveraged. Get good teams behind you, because just like hiring for a business, there are people out there that aren't very good at what they do. So yeah, you are going to rifle through 5 or 6 GCs. You may go through 3 title companies. You may rifle through 5 lenders, and that's okay. That's part of owning a business, hiring and firing.
So Jet can help you scale in the business, help you with the short-term loan, help you to refi into a long-term loan, a DSCR loan. So you can buy more and more property to add into your portfolio. However, the investor should be smart enough to realize that the more rental they want to add, the more reserved, the more liquid they need to be.
Yeah. And the other thing we also do is for the people that are wholesaling, and everybody listening here should wholesale some. You'll get, like all of a sudden you'll hear people, I can't find a property, can't find a property. It happens to almost everybody. All of a sudden you have 5 of them and you have no idea what to do. And there are 5 good ones, but you don't have the money for all of them. All right, and then you wholesale some and you increase that liquidity. We actually do transactional funding for wholesalers that can't assign. They have to do a double close. So we even do that too. So again, anything that you can possibly think of for investment in real estate, we have the capital for it.
Yeah, I've used Jet in my early days for that before, transactional funding. You know, when I started out and I didn't have the cash to fund the first deal. So you guys came in and funded it and I got paid, and that was a very handsome wholesale fee. Okay, so should investor know when coming to a lender, like what are deal breakers for you guys?
There's only a few deal breakers. It's really against how the borrower can perform. All right, so nothing so much about the actual property condition. If the property condition is extremely poor, we'll try to make sure that you've lined up at least a GC or something before, or a few of them bid, so you understand what it's going to take to renovate this property. But a deal breaker for me is if the borrower is absolutely going to fail at this with their liquidity. And this is what I mean. You'll hear like radio stations and people like, buy real estate with no money down. Okay. Well, just because you may not be coming out of pocket at closing doesn't mean you don't need any money. So you need to be able to have what I look for to make sure somebody is safe, and I know that they can make money, is I make sure 3 things happen for every closing. I make sure that they have at least 1/3 of the renovation budget so they can start the work, and then I reimburse them for completed work so I know they can keep the project moving. I make sure that they have at least access to 6 months of interest payments so I know that they can make their payments on time as they're renovating the property. And I also look for another thing. I look for if they are coming out of pocket at closing on how they bought it, because it's not, you can get 100% financing. Do you have that money because it's gone day one? You have to come in with a cashier's check to title. So those 3 things for each property, I would be very cautious as a borrower if you run into a lender that does not look for those things. I don't look for those things because they're absolute requirements for credit lines or anything. How we sleep at night is we know that we've done the best we could to make sure that person is making money and that person's successful in their deal. We don't want the property. So if I know that you have those 3 things, you have an extremely high success rate that you are going to complete this project and make your money. If I don't look for those things, I just close it and you only got 10 grand, but you got a $70,000 rehab and your note is $3 grand a month and you don't have anywhere close to that, you just paid all this money for me to take the property, and we're not going to do that. We have no interest in that.
Yeah, you don't want to end up with the property unless it's the house on the water, on Lake Woodlands, and
I don't want to explain the foreclosure. I just don't. I'll go buy my own waterfront place with my own money. I don't need that. I don't need that nonsense.
That's a joke. Don't take it serious. If you're listening, watching. Okay. So if someone wants to apply for a jet loan today, there's a link in the description show notes below, and you can click on the link, that link to apply. If you have any questions or anything that you want to chat about, how do they get in contact with your people, Alex?
Go to jetlending.com. If you look at the About Us page, you'll see all the loan officers and all the staff members that you maybe want to work with. You can call them, you can text them, you can email them, whatever you want. There's a chat thing on the website you can use. Really just, any way of mode of communication that's best for you, just reach out to us and just know that we've been around for so long. Ask the question you need to ask. Don't be shy about, well, I don't want to seem like I don't know. There is always a time where somebody didn't know until they asked. So just get with us on anything on Jet Lending. You can put all the information. You can get all your pre-approval letters online. All your draws done are online. Everything's done there to make it easy for you. So if you buy an iPad or a phone or computer, you can do anything you want.
All right. So once again, if you are thinking of applying for a loan with Jet, do hit the link below. And if you found this episode helpful, don't forget to hit that subscribe button, because we are dropping fresh insight like this every week to help you crush it in 2025. And if you got any questions, any comments, please drop them below. I read them all and I love to hear from you. So thanks again and see you in the next video.